Hey guys, I said I would come back and we would talk about your credit score and the chemistry of it. You know, what makes your credit score? How do they come up with it? So I'm gonna give you a short breakdown. Again, it's another short video. It's not long. I'm not gonna be doing a whole bunch of talking. Go straight through these points. And if you want a free over the phone credit restoration consultation, hit me up at the phone number in the caption, 682-25-345-11. All right, so first of all, 35% of your credit score is your payment history, okay? So that means that's the largest weight. So if you have a card note that you're paying and you miss one payment, it can bring your score down 100 points. You know, if you have a mortgage and you miss one payment missing means 30 days or more, okay? So if your payment history is off, you're gonna affect your credit negatively in a more dynamic way, okay? The next one is 30% is your debt. So I had someone text me and they were like, hey, I have a car that I only have 1 year left on it. Is it better for me to pay it off or just pay it? So if we just look at the facts that the debt is already under 30%, you want to keep like credit cards and any loans that you have under 30% utilization, okay? So at this point, if you only have 1 year, it's safe to say that that particular debt, that auto loan, is under 30% utilization. So paying it off is not going to increase your score by some major number. However, if you keep it active and pay on it on time until the end of that particular loan, that will benefit you because, again, payment history is more of a percentage than the debt, okay? So now, if the car was, let's say, a 72-month or 74-month and or 6-year loan, and you were only 3 years in, you're probably at about 50%. I would suggest that you pay half, so pay it down to 30%. That's going to help you boost your score. And then start making actual payments to make that payment history good. What's up, Jay? What's going on, baby? So that's the debt part of it. But that was a question that I did have via text message. Let's do, what do we have? Length of credit history, 15%. So that's just how long have you had credit? So let's say I had a credit card since I was in college, right? So you have 10 years on that. And then your most recent is 2 years. So the longest debt that you have on your credit is 10 years. It only goes back 10 years worth of information as far as your credit history is concerned. That's good. So the longer the debt, the better. Now, there are two things here. If there's negative payment history on that debt, that's not good, okay? However, the payment history within the last 2 years or 24 months weighs more than the payment history prior to that, okay? There's more weight to the most recent 24 months than it is to the previous months. Not that it doesn't matter, but there's just more weight to it as far as it affecting your score. So when you go to, say you go to make a purchase, a car or a house, they take a look at your credit history, your payment history. They see that, okay, early on in the loan, you were not making payments on time. But within the last 2 to 3 years, you've been making your payments on time. It's going to be a little iffy as far as what they're going to do with your interest rate. Any legitimate loan officer is going to be like, what happened here? And you'll have to explain yourself. It's hard to say because it's a case by case basis. If it's an older account and you need that length of credit, you might want to keep it. If it's not an older account and it's closed, you might want to get rid of it. So it's case by case. I couldn't really tell you without looking at someone's credit directly. The 10%, where are we at? Types of credit. All right, so you need multiple types of credit. You need revolving. You need credit cards. You need home loan. You need auto. You need to have a mixture of credit so that the person that is giving you this loan, okay, the loan officer, is able to see that you are responsible in paying all types of debt, not just one particular type of debt, okay? So they want to know that, hey, if I give you this type of loan, am I going to get my money back? That's all they really want to know. And they come to that conclusion according to your history. I get a lot of people on the phone. They say, oh, my credit's not that bad. If you just have anything after just have, if you have anything after just have, you need to get credit repair. You need to get anything negative, inaccurate, erroneous, needing to come off of your credit. All you need to have reflected is positive credit, because they're going to look and they're going to say, one person who has all clean credit, it's all good. They say, oh yeah, I'm gonna get my money back. They're making payments. They're looking good. Great. The other person decided to keep some negative information on there. They didn't want to go through credit repair, didn't want to pay for it, whatever. In the back of this loan officer's mind, they're like, I don't really know if let's just increase the interest rate. So let's give you a larger payment, okay? And then maybe give you the loan. So you're gonna have one of two things, a larger payment or a no on the loan. And that's just because they're looking out for the company. They want their money. They want to make sure that you're going to pay their money back. So that's what they do. You're looking at the last percentage is new credit. So how many of you guys have gone to the auto dealership and you're trying to get a new car and they run your credit, and then you take a look at your Credit Karma and you got like 15 inquiries? This is what the dealerships normally do. They go through a third party to find the loan for your car. That third party is the one that runs the credit, okay? And they send your application out to several different lenders, and those lenders come back with whatever they want to give you for the loan. It's better to find out what you're approved for prior to going, just so that you know what they're able to offer. If it's something you want to go through with, then you can do that. A lot of times you can get approved at a credit union, even your bank, prior to going, and you don't have to have all of those inquiries on there. Now, know that not all of the inquiries, when they run it all at one time, each of them don't count against you. It's kind of bundled into one. However, if another lender is looking at your credit and they see all of those inquiries, it just looks bad, right? It looks like you're desperate. It looks like you're trying to apply for a whole bunch of credit. Don't do that. Don't do that. Don't go into the store to try to save, 20% off at Belk's, or, an extra 50% off at JCPenney's. That almost sounds really good. However, don't do it. It's not worth the ding on your credit. It's going to count against you for a full 12 months, and then an additional 12 months. So it's going to be on there for 2 years. The first year is when it counts against you. The second year does not count against you, but it still looks bad. At this present time, I only have one inquiry on each of my reports, and that's from my apartment. But I don't have any inquiries. Like, I ain't applied for no credit. I don't need anything other than what I already have. I have credit cards. I have now I have my rent on there. You know, I have my car. I don't need anything else. Trying to run my credit. I'm about to get a house. I'm about to have another car. So I need to have that stuff together. Don't let them run your credit just to get a Walmart card or just to get a, Express card or whatever. Hold out. Patience pays, guys. Be patient with your credit score. Take your time and build it. But you've got to get it restored first. You've got to get it clean. Stop trying to do it by yourself. Get it done. It takes 4 to 6 months for my company to do this for you. Okay? 4 to 6 months. Less than $90 a month. We can handle it for you. We can take care of it. You don't have to do that. It's kind of like an oil change. You can change your own oil, but you want to go to the spot and let them change it for you, right? Let us change your oil. We're professionals. Let us do it. So what I want you to do is share this video with all your friends, on your page, in your groups, whatever. Share this video just to get the information out there. You're just sharing info with people, helping other people out. You never know what position people are in, and you don't know what information that they don't know. This might help somebody and prevent somebody from going to go purchase a car without going to get the loan first, so they don't have to have all those inquiries on their credit. And I'll be back with you guys tomorrow. We'll talk about the different type of FICO scores, because it's not just one FICO score, guys. So we'll talk about that tomorrow, all right? See you.